saw this video where a lady is saying, or I guess she was saying her friend was saying, why doesn't everyone have an S Corp? It is dumb if you don't. And I think this may be my most important video where I'm going to discuss why it may not make sense for a content creator to elect S Corp. And the overarching statement here is that listening strictly to social media tax advice could be the reason why you end up paying tons of taxes when you did not need to. If we're meeting for the first time, my name is Ronnie, Canadian US CPA specializing in the creator industry. If you've been looking for a CPA that speaks directly to you, you found me. He's at the Vancouver airport waiting for his flight. Let's talk about this. A few reasons. First and foremost, not all content creators who earn money in the States, like hard US dollars, are going to qualify for S Corp. Non-resident aliens cannot have an S Corp. Second thing is you may not want to have an S corporation if you have certain goals for your creator business, because the max shareholders that can exist with your S corp is 100. Now, for some, if you're a solopreneur your whole life, you're like, oh, that's a non-issue. We cannot make that assumption for all creator businesses. They could be running media companies that are going to have so many investors involved that could exceed that maximum threshold of shareholders. Piggybacking into my third point, where you can only have one class of shares with an S corporation. Without going too much into the jargon, having multiple classes of shares is exciting for investors. Now, if you're growing your business, if you have aspirations of maybe having an exit in the future from your creator business, you may want to be able to attract investors who are going to be able to invest in your business in exchange for equity and having preferred shares. And they like preferred shares because it gives them a little bit of comfort in the event that your creator business goes south, right? If you use a media production example, you've built so much asset base from equipment, and it's something that you can actually sell off, and they've invested into that business, they're going to want to know that if that production company, that media company goes south, they have priority in recouping their investment. And an S corporation unfortunately does not allow them to do that because there's strictly one class of shares. Last but not least, the US tax code has something called QSBS, which allows you to sell your business pretty much tax-free. And we're talking about millions of dollars of capital gains here. And an S corporation cannot do that. Does this mean that this lady is spewing horrible advice? I don't think so. I think she's spewing blanket advice, and I think it's dangerous where a creator who is potentially building something that could be sold for millions of dollars could see that video, elect S Corp, and miss out on those tax-free opportunities. Hope this helped. It's been a pleasure. I'll see y'all in the next video.